Hey traders, here's a quick lesson on trading ranges and today what we call a commission generator. A couple of things. First thing is to have the ability to look at things in multiple time frames to see where support and resistance is. On the right side I've got an hourly chart. QQQ, NASDAQ 100 ETF. Last Friday, prices popped up and they fell all the way back down, and this morning they gapped down. So prices went from the bottom of the range to the top of the range, back down to the bottom of the range. It was likely it was going to stabilize down there, just basic support and resistance. Now, it could have bounced up, filled the gap possibly, or went higher. It couldn't do that, and it traded sideways. On the 5-minute chart, these dots are shown as pivots. That means that there's 3 higher lows to the left and right, or 3 higher lows to the left and right. When you've got opposing pivots going back and forth in opposition of each other, you got a trading range. At the bottom of a trading range, prices are going nowhere. You're going to have a commission generator. Another way of looking at this is when you see the moving averages intersecting the middle of prices. It's a good reason to stay away. Hope that helps. If you have any questions, email me, Greg at Master Trader.